So guys, it is Sunday afternoon and we just made a nice cup of espresso and we're going to get prepared for the upcoming week. Now, when it comes to trading, I truly believe in the proper preparation prevents poor performance. That's a saying I'm sure a lot of you guys have heard, and I do truly believe in that because when I prepare properly for an upcoming week, I feel more locked in, I feel more prepared, and I feel more ready to take risk and understand what I'm putting myself into. One of the biggest things in trading is confidence. We have to have confidence to execute our trades. How do we gain that confidence? We understand what we're looking for. And a day like Sunday is a great day to get ready for the upcoming week. So in today's video, I'm going to give you the 3 steps that I do every Sunday to properly prepare for the upcoming markets, give you guys a little bit of insight into my world and what I do to succeed trading the markets. So I hope you guys do enjoy coming for the ride. And let's just jump right into the charts. So guys, the first thing that we must do always when we come into the markets on a Sunday and into a new week is understand the macro data. So understanding macroeconomic events and also understanding if there's any big earnings events that are approaching. I use Forex Factory. You can see it here up on the screen, and you can see that there are some big ones this coming week. Tuesday, Wednesday, Thursday, we have CPI, PPI, and retail sales all throughout the week. So that means one thing. On Tuesday, Wednesday, Thursday, we have to understand that swing trades could be a little bit hard to manage, understanding that there could be some pre-market movement, pre-market volatility, and we don't really want to guess on that type of data. So coming into this week, the one key thing that I would say is, hey, I may want to sort of take it easy on swings. If I'm looking at this type of data with those red folders, I know that there could be some volatility and it might be a good week to just be a scalper. Profit taking by end of day, take my money, go to sleep without any risk, right? That's the first thing that comes into mind when I see a calendar like this. Now, another thing we have to think about when we see major macro data like this is that Monday, when there's no data, but it's approaching some big events, it might be a pretty lackluster day. We have CPI on Tuesday, which would tell me that Monday's probably going to be a balanced market. There's not going to be a lot of people trying to take either side of the market when they know that there's a big macro event approaching. This is sort of like those Wednesdays prior to FOMC. Everything's pretty silent, pretty sideways until that big volatility event. So I know coming into this week now, preparing on a Sunday, that I have major data. I could see some sideways and lackluster action on Monday, and I don't want to be a heavy swing trader through these events. So I'm starting to wrap my mind around how I want to tailor my week. So the next piece of data I want to go ahead and look at is the upcoming earnings. I go over to X, I go to Earnings Whisper X account, and they always post an up-to-date earnings calendar, and I want to understand if there's any major ones that are going to be coming up. And we can see here on the earnings, it always starts out with banks and financials. So this is the first week of the earnings. This is when it all starts, right? Because we see those financials, JP Morgan, Citi, Wells Fargo, those are coming out on Tuesday. So it's important to understand that we are heading into earnings season. We can see there on Thursday, TSM and Netflix. So going through my mind, I know, hey, these are the first big cap tech. I know TSM is semiconductors, which will affect semis, and I know that Netflix is just a major name on the market, so this could start to affect markets either positively or negatively, depending on the earnings events. So now I know coming into this week, I got CPI, PPI, I got all those things we talked about, and I have some major earnings to watch out for. So I know this could be a week of a lot of volatility, being cautious around overnight swings. And now that we have this data, let's jump onto the charts and start putting together a thesis for the week based off of key technical levels. So pulling up the charts, the first place that we have to stop is the NASDAQ and the S&P 500 futures. We have to get a good understanding of what is the NASDAQ and S&P doing, the larger market. What's the current trend? Is it down? Is it up? Is it sideways? Are we looking for continuation, or are we understanding there could be more consolidation, right? What are these things, these larger term and more macro level things that we're going to be looking for? So let's go ahead and break down this NASDAQ chart together. So looking at this chart right now, you guys can probably see that over the last week, we were trading sideways pretty much the entire week. We saw a very clear high at 23,100, and we saw a very clear low come in around 22,800 on the NASDAQ futures. Now, I look at where did we close on Friday? Where did we close the week compared to Monday? And we can see from Monday to Friday here on this chart, here is Monday right here, and here is Friday. We can see that we closed in the exact same spot. So what I believe in when I look at this chart is that we have to expect next week to do the same thing. We can't try to expect something different. When we start trying to expect something different and something to change, that's typically when we create that bias that isn't really there on the chart. So creating a bias is sometimes a very negative thing, but creating a bias that is proper is actually a positive thing, right? And a proper bias here is more consolidation, right? The market consolidated all last week. We stayed within the exact same range all last week. So coming into this week, the proper bias is more consolidation heading into this week. Now, let's think back to what we just talked about. We talked about major CPI, PPI, major earning events. So what I would say after thinking through all of this is that there is a very high likelihood on Monday, tomorrow, that we're going to stay sideways. So let's think through that logically, right? Why would the market break out of this consolidation range prior to major macro events? That is Monday, right? Monday, there's no macro events. And I would assume that tomorrow we get more of the same trading within this range, and then the CPI, PPI, and maybe Netflix TSM earnings on Thursday could be the reason we expand outside, above, or below this channel. So we're starting to put these pieces together to sort of build our plan. So coming into this week, tomorrow on Monday at least, I'm really expecting the NASDAQ to stay within the range of last week, which is very clear at these lows of 22.8 and these highs of around 23,100. So I've created these levels, and I've created sort of a mindset around what I expect heading into Monday. And then I know with the macro data that's likely to break this channel. And then at that point, I would look at what level is next, right? And so to the upside, there is no level next. This is the all-time high on the NASDAQ futures. So I know, hey, if I see the NASDAQ break above 23,100, I'm going to be looking for upside expansion and continuation. So that's something that's now in my mind, and I'll be looking for all through next week. Now, if we have that data and it does negatively affect the markets and we do break the Monday low, then I would know I'm going to be looking for downside. Now, if you think about this bigger picture, if we break below the last week's lows, that just logically is something bearish to consider, right? So if we do break that Monday low on data, I would expect the next level to come up, right? And us move lower to our next technical level. Now, when I'm looking at this market, to me, the next technical level is very clear, and that is right here at this Friday low, back from June 27th, this low from Tuesday, July 1st, and this low right here from Wednesday, July 2nd. And I can see that between the Monday low of last week and these lows here, we had a pretty sort of low volume, very volatile and aggressive area in here. And I would expect now that if we break that Monday low, we would find a very nice short opportunity down into these lows here at 22,600. So now I have that game plan mapped out. If I see the market reject below Monday's lows of last week at 22,800, around 22,780, I will then be looking for a short opportunity down into 22.6. Now, I think it's very important for you guys to understand that just me doing this and understanding these levels and creating these game plans is going to help me when it comes into acting upon this in real time. If you are not aware of these levels that we're talking about, and you're not aware of what the next level is and what could happen when something breaks, you're going to have to be acting upon that pretty much blind as the market is trading with high volatility. This leads to mistakes, and this leads to you just not acting upon proper opportunities. So if I'm preparing this on a Sunday and I know, hey, if we break Monday's lows, we're going to 22.6, this is a very clear game plan. If I see that happen intraday, I'm acting upon it. And that preparation that I'm doing right now around 4 o'clock on a Sunday could be the difference of making $10,000, $20,000, $50,000. Just me looking at these charts and preparing myself properly. So I think we have a great game plan here on the NASDAQ. And really, this game plan is just about understanding where are the key levels and what's the next level if one of those breaks, right? Because we can't be thrown off if a level breaks. I think a lot of you guys out there think we create these levels and they can't break. They're like levels that are impenetrable. That's not what key levels are. Key levels are designed to break. breakouts or breakdowns. That's when money is made. You want these levels to break. So understanding where those key breakpoints are and the opportunity that could happen if it does happen, that's where you make your money. But you have to be properly prepared with the levels and understanding what could happen if they break. That's what we're doing here on a Sunday. So we have that here on the NASDAQ futures. Let's go over to the S&P 500 futures. So looking at this S&P 500, we have a very clear story, very similar story to what we had on the NASDAQ. We have some very clear supply highs here, anywhere between the 63.15 and 63.33. Now you can see that this zone is relatively large here for the S&P 500, and the reason I have this is because I see rejections right here, I see rejections right here, I see rejections both Thursday and Friday right here, but I also see that any buyers that sort of bought longs or took longs above 63.15 got smacked into 63.33, right? So anyone that bought here got smacked. Anyone that bought here got smacked, right? And so I'm going to expand my supply zone to make sure that I'm not a buyer above 63.15, because if I'm looking at data, which is past historical data, which is the charts, you can see that a buyer above 63.15 did not work, right? So I'm going to be cautious being long anywhere in here, understanding that every attempt higher in this zone has failed. Now, it's always important to zoom out on the Sunday preps, right, and understand what are the major spots you're trading back down into, and it's very important to understand that that 62.35 level that we just talked about is the previous all-time highs here. Anywhere between that 62.60, which was our next level, and this 62.35, 62.25 are some major previous highs on this S&P when we zoom out to the daily chart. So if we know those are major previous highs, then we know, hey, we probably should not be shorting back into this low. We probably should not be shorting back into this low. So we are understanding that bounces could very well continue to come in off those major daily points. So we have our clear spots right here, right here. We have our target here. We are prepared if this market does come down, and we're not panicking on the intraday when that starts to occur. Why? Because we're preparing ourselves. It's such an easy concept, but a lot of people don't do it, and that's why maybe me and others in the trading world are more profitable than some others. This is the harsh reality, my friends. Some people, they don't prepare. They just come into a Monday, they start trading. They think that that's enough to make money. It's not. There's people out there like me and maybe like you that are taking the time to do this, and they're going to be able to react and take advantage of these opportunities. So I hope that you are one of those people. And now I'm going to do this exact same thing on the SPY and QQQ, which is going to look very similar. So I'm going to go ahead and skip that for the SPY and Qs for the video's purposes. But understand that we're putting our game plan and thesis together for the ES, the NQ, the SPY and the Qs, the overall market, the larger, broader market, to make sure we know if a key level breaks, what's the reaction that we should expect. So after we do that, the next step is to go through some individual equities. Let's look through stocks like Tesla, like Nvidia, like AMD, like Broadcom, all our big major tech names, to look for trading opportunities for the upcoming week. We can look for our break and retest rejections. We can look for our break and retest long opportunities, and start to put a list of around 3 to 5 A+ opportunities that I would look to track through the week, right? I'm going to put a list together of about 5 names. Of course, I'm going to be looking for others throughout the week, but I want to sort of get together a small list of those ones that I'm going to be laser focused on. I don't want to spread myself too thin. I don't want to be looking at 10, 15 different stocks. What are those 3 to 5 stocks that are very clear, have great opportunities? That's what I want to go ahead and do on a Sunday, and I'm going to take you along for that ride right now. So to do this, I pretty much just go to the daily chart or the 4-hour chart, and I just scroll through tickers and see if something has a nice clean break and retest on the larger time frames. If I see something very clear and it sort of shoots out to me, I don't want to be looking too much in the weeds. I don't want to be grinding down into the 2-minute, 5-minute chart and really trying to find something. I want it to jump out at me. If it jumps out at me, I'll dig deeper, right? And so here's Tesla, and this one does sort of jump out at me, but there is a caveat to this, and it's just understanding that Tesla has been a very hard stock to trade lately, at least for myself. So it's sort of one that is tainted just a little bit, but there is a very clear setup that does speak to me here. And you can see here on the daily chart, we have previous highs that have turned into lows and lows, right? And that right there is a break and retest. That is a market structure right here, right? We can see there was a structured one here, sort of consolidation sideways between 290 to 213, which is now structuring higher, right? This is a higher low, break and retest. It's very clear right now. Now I look at this, right, and it makes me eager to get down a little bit deeper, right? So what I'll do is now I'll jump down into the hourly chart, get maybe the last 30 days to 90 days of price action, and start to spot levels that I think could fail, could hold, right? Just sort of build that thesis on this stock. So for me, the first thing I see here is that there's some major previous lows right around this 330 spot. If I put a level of rejection around 330, I can see there were some major lows here, some major rejections here, and major rejections here. And you can see that Tesla is coming close to that area up into 330. So that's going to be a level that I'm probably not going to want to be long into, as it was a major previous rejection right here, which held as lows prior. Now the next thing I'll do is, where's my daily moving averages? And if I zoom into Tesla here, you can see that Tesla is trading into major daily moving averages. The 200, the daily 20, and the daily 50. Those are huge spots for Tesla. And so you can see just a week ago, Tesla traded into those levels and got rejected heavily. So I'm not going to want to be along into that area. So this setup now sort of goes on the back burner, right? It looked good on the daily. I went down into the short terms. Doesn't look that enticing, because at this moment, am I going to want to be long into those moving averages? Am I going to want to be long into 330? So what would I do here? What I would do here is very simple. I would go like this. I would right click on 330. I would set an alert, and I would make sure that I know if Tesla gets over 330. Because if Tesla gets over 330, then I know, hey, Tesla just reclaimed these lows, got above these highs, and could now be a very interesting long opportunity, maybe back into these highs at 370. Now I'm interested. So I'm sort of putting together these ideas. In this situation, being pretty much in the 50 percentile of this channel, if I draw Fibonacci, we can see that Tesla is pretty much trading right at the 50 percentile of that major high and major low. That's not an edge, right? So for me, this one goes off the watch, and I'm just going to let this thing trade around. So let's go on to Nvidia. Nvidia, we know that SMH is very strong, which is the semiconductor sectors. We know that SMH has ran this market lately to the upside. This is me understanding my current market structure and the situation that is on the current market. So Nvidia is going to always pull my attention coming into an upcoming week, because I know semis are strong and I know it's been the strongest spot on the market. So I'm going to go ahead and break this one down onto the 30-minute and start spotting out some levels. Now, this one very much interests me, and the reason for that is because I can see that Nvidia had some very clear highs at 164.50, clear highs right here, and clear highs right here. Now we can see Nvidia had a very strong breakout day on Friday, which is absolutely going to attract volatility and traders into the next week. Now I can see here that there's going to be some key levels to watch. Now the first one I'm going to watch here is the previous highs here at 164.50, and I'm going to look to see if that turns into support. If Nvidia can turn these previous highs right here into new lows, then that could be a fantastic long opportunity back into the high a day from Friday, possibly up into that $168 level. So that right there is a pretty positive risk reward. If I risk 164.50 and target up to 168, this could be a great break and retest long entry to look for Nvidia to the upside. Now, if Nvidia does break that level, then I have to be prepared for my next level. And my next level is very clear here at 162.50. That's going to be the next low that I watch to see if a buying opportunity does arise. Now, what I'll make sure to always do is to get a good zoom out and understand where the best long opportunity is. Now, we just looked at where the short-term long opportunities are, right? The highs of Friday, the highs of the previous days, right? Those are all short-term ideas. But I want to make sure I know what's that really juicy opportunity. Where's that daily 20 SMA? That's always in my mind. Where is the daily 20? Because the daily 20 is always going to be the best spot to look for a long in a established uptrend. And we can see here that is very true on Nvidia. So we see that daily 20 SMA, which is that light blue line on your charts. Look at that daily 20 SMA here. look at as Nvidia traded back to the daily 20 SMA here and here. This is always the best opportunity on a stock in a strong uptrend. And it just so happens that the daily 20 lines up perfectly with the previous all-time highs here at $150 per share. So when I look at this chart, it makes me very interested in whether I should be waiting for that deeper pullback back to the daily 20, back to 150, and then take this market long, right? So I'm always making sure I know these are short-term opportunities here on Nvidia. These are short-term long opportunities on the 30-minute, on the 15-minute, right? Previous weekly highs into new lows. This is good. But what also do I need to know? Where's the major pullback spot? Where's the spot that Nvidia would really be a very interesting opportunity? That is back here at that 150, 153. That's on the daily chart. Now, if I have any open positions on, I'll make sure on Sunday to go through the open position and understand what's the upcoming levels of potential rejections or support to just make sure I know how to manage that position coming into the next day or the next week, of course. And so one swing trade that I currently have on is AMD. And AMD, the reason I have a swing trade on this is because AMD pulled back to these previous highs at $133 per share, right in this area, which was also back down towards that daily 20. So I looked at this as a great long opportunity, something that we prepared for actually on a Sunday prep video with the mentorship group. We can see that AMD had this nice downtrend after this breakout move over 133. This is a break and retest coming back down to that previous rejection point, retesting it here, daily 20 SMA holding price action up, and I was able to grab along over this 140 previous high. So right here, if we look at this chart, we can see, let's go down to the hourly chart now, we can see that AMD had a previous high right here at 140, and it had some previous lows here at 142. So I saw on Thursday of last week a hold above this area, which gave me an opportunity to long this stock and hold it as long as this key area now turned into demand. Previous rejections into support. That is what I'm looking for this to continue to do. So AMD right now closed very strong on Friday, holding above these lows and these highs right here, creating this area of demand between 140 and 142. Now we can see back here we had some clear rejections at $148 per share. So approaching this upcoming week, I'm going to make sure I know, hey, if I start to see rejections at that 148, then I'm going to probably start to de-risk a little bit more because that just looks like a potential rejection spot that I probably don't want to get stuck in. So this could be a great profit target area, which I have already taken profits off into close on Friday because of this preparation. But now I know coming into the next week, that's going to be a spot to watch. So at this point, I'm just going to go search through some stocks for the next 25 to 30 minutes, look for setups that I think are very interesting. And after I do that, we'll finish off today's video with some of my top watches for this upcoming week. And hopefully this has helped you guys understand what I do every Sunday afternoon. So guys, I spent a little bit of time to find some of my favorite setups here for the upcoming week, and I'm going to go ahead and talk about 3 to 4 that I think are very interesting. And the first one is going to be Amazon. Now, Amazon has had a very strong trend higher, sort of just bounced off this very major demand. You guys can see right here, we had these very clear previous highs that turned into pretty much a week long, 2 weeks long of holds, while that daily 20 SMA was catching up. So this really checks a lot of those boxes that we were just talking about. Now, just on Friday, we had this expansion move here on Amazon that is interesting to see if it's one of these moves, right? One of these moves into the next structure. You can see that Amazon had structure and it has structure. But to get from structure 1 to structure 2, it needed to have an expansion move. And sort of that's the move that connects, right, these two structure points. And it looks like Amazon could be ready for that next expansion. I need to see it turn these previous highs into support. So if I look at this hourly chart, I can see that we had some major previous highs around this 224 to around this 225 area, which Amazon did close sort of just at on Friday. So coming into this week, if we do get market structure to the upside, if we do get market strength, I'm going to look for Amazon to turn this zone right here between 224 and 225 into support. And what I'll do is I'll make sure to create an alert below 224 to know if Amazon did fail below that. And I'll also make sure to set an alert above that 225 to make sure I know if Amazon is above that. And just sort of wait to see. This will absolutely be a watch on my charts. Now, the next thing I'm watching is Coinbase. And we know that Coinbase has been hot, crypto has been hot, Bitcoin has been a great thing to be paying attention to. That's part of our preparation on a Sunday. So we can see that, hey, Coinbase has had a huge breakout here. We'll go to the daily chart and we can see that Coinbase has actually broken above some of these IPO levels. We saw that the IPO high was 429, but before that, we have broken above the IPO open, which is $334, and above this 370 level, which was a major rejection on Coinbase previously. So if we go here, we can see that Coinbase is above some huge spots. We have these previous major highs here between 377 and 380, and we can see that we pulled back into that level on Friday and actually held it. So we had the breakout on Thursday, the pullback on Friday. The pullback held these previous highs. That is very interesting to see if Coinbase can maintain and go higher on a break and retest long opportunity. Now, the last stock I want to talk about is Boeing, and this is going to leave a really good lesson as we wrap up this video about setting alerts, picking your spots, and then waiting for it to happen. Now, you guys can see here on Boeing that we had a very strong breakout right here over these previous highs at around $220 per share. Now, you guys can see that previously, and this was not made today, I had a very nice demand zone here around 220, which was this previous high, and you can also see that I went ahead and I set this alert. Now, this alert has never gone off. This alert over the last 3 trading days never got touched, and Boeing has continued higher. Now, for me, that is okay. This is what I accept. And I think this is a really big difference maker for maybe a lot of you out there that need to stop chasing setups and letting them come to you. All these setups I make on a Sunday and this analysis I do is designed to make sure that we wait for the A+ and the best opportunity to arise. And so in my eyes here, the best long on Boeing is going to be a pullback back to this high and then a long off of $220 per share, which I can almost guarantee. I'll never 100% guarantee, but I can tell you that at some point in the future, Boeing is going to pull back and it's going to find a nice opportunity off this 220. Now, it may be at 240 before 220. It may be at 260 before 220, but I can tell you that it's going to retest this breakout point. And when it does, I'm going to be prepared for that long opportunity, and that's going to be the best and most lucrative trade on Boeing, rather than just chasing this into highs and then getting slammed on some random day. That is not what I want to expose myself into. Of course, Boeing looks very strong, looks like upside is potentially coming. This is a very nice curl and upside move, but unfortunately, I'm waiting for this. And maybe that is what saves me from getting a very heavy loss on a pullback versus a very strong win on a break and retest long opportunity. Sticking to the strategy, creating those levels, and creating the game plan that you must stick to. So after spending about an hour and a half of time on the charts, creating my bias and my thesis around the markets, knowing key inflection points, and knowing the macro events that are going on, I'll make sure to get some rest and take the rest of the night off. I want to make sure that I'm mentally prepared for the upcoming day. The brain is a muscle just like anything else in your body, and trading is a very stressful thing to do, so it's always very important to get a good night's sleep every Sunday as we head into a new week. Make sure to rest and relax. Enjoy time away from the charts as well. Get your time in, but also know how to disconnect. It's very, very important. If this video did help you guys, make sure to go ahead and press that like button. Subscribe to the channel for some more videos on the channel. I wish you all the best in your trading, and I hope that some Sunday prep like today will help you in your future trading endeavor. Press that like button, subscribe to the channel, and I will see you guys in the next one. Peace out.